let's move right on then. Lots more to chat about. And we're discussing the wealth report by Knight Frank, talking about how the super rich seem to be on the rise in the country. So what exactly is driving this growth? We've got Gulam Zia, Senior Executive Director at Knight Frank India, joining in on the show. Thanks so much for taking time out. Let's just talk about some of the key takeaways then from the latest report that has come in. The fact that India is going to record the highest growth in UHNWIs in the next 5 years. What are going to be some of the factors that will lead to this?
Well, what's very evident is the very unique position the Indian economy is in right now. While globally you have recessionary trends in many of these countries, India at on an average 7% growth in GDP is an outlier. And that has a direct impact on the individuals who are getting into or barging into the ultra high net worth individual bracket. And that is something which is what this report talks about. Some 13,200 odd is the number today, and expected to grow at the rate of 50+% per annum. Globally, that percentage is hardly 28%, but in India, it's almost double of that. And last year as well, while the global percentage of growth in UHNI numbers was barely about 4%, in India, it was 6%. So overall, these are stark numbers right on our faces that the economy is impacting creation of wealth and wealthy.
Speaking, wouldn't this slow down because the base effect has kicked in and the growth rate is not going to be that strong?
Well, that was a year back. 2022 is when we saw a reduction in that number, obviously because of the pandemic and its after effects. But 23 was a bounce back, not just in India, but globally. As I said, that was a year when pretty much everywhere the high net worth individuals were much lesser, but the turnaround is spectacular. And as I was talking about a short while back, India, because of its unique economic position, has been creating many of these UHNIs than the rest of the world.
So if one is looking at the report, it says, okay, demand from ultra HNIs will come. I mean, is it like a clear indication that one should invest in luxury real estate end of the market because that's where I think the bulk of the flow would move in?
Well, I won't jump to that conclusion because, when we are looking at the pattern, investment patterns from that specific categories of UHNIs, it's not just financial gains. It's also a lot to do with investment of passion. So it's like you're showing off the positions that you have, and that need not necessarily be linked to the gain in your investment returns. And that's very evident when you're talking about especially the other category of the watches, the art, and so on and so forth. While a few of them have given spectacular results in last 10 years, but real estate hasn't really been giving that kind of a growth in last year and a half. While 23 was an outlier for ultra luxury residential apartments also, but even there, the rise is 7 to 10% as we speak right now as well, and projected numbers are also not very different. So if we are looking at, from my perspective, or perhaps most of the midstream perspective, the perspective remains the same, that it is not going to grow as much as what you would want it to be, unless you want it for passion.
You have a column dedicated to what 1 million can buy in Delhi, Bombay, Bangalore. How do you see this 1 billion number if it is constant? Where do you think the maximum appreciation would be, or perhaps where the maximum square is going to be reducing the most?
Well, currently it is Mumbai of the Indian cities, and which is what is evident in that specific chart that you're talking about. Mumbai is on 8th position today. Delhi is on 39th position, and Bangalore is almost about 60th, 59th position. So that's a number, like how much of a area can you buy in that money? And that is shrinking. As I said, that is of course direct related to 7-8% of price rise that we are watching. While Manila has barely about 160 odd square feet you can buy in that amount, Mumbai still offers you about 1200 square feet. So there's the difference between the costliest real estate in the world, residential prime real estate, vis-a-vis where we are in India. But the other two cities are way behind. Mumbai is the only one which is ranking in the top 10.
Okay, that's quite interesting with respect to some of the insights. And residential as well, that seems to be booming, but maybe it was a bit challenging last year in terms of commercial real estate, 2023 at least. Any reversal being seen for this year and the years ahead for commercial real estate?
Well, 23, just beg to differ from your perspective. I think 23 was a fantastic year for commercial real estate also, almost touching the same numbers as what it was pre-COVID. So at least in India, it's a bounce back year, 2023 it was. While again, rest of the world, commercial real estate is in a bad situation. In India, it's a different story. And that's also a couple of main reasons, key reasons to that are the global capability centers. The Indian manpower, resources, human resources have actually climbed way up on the qualitative aspects. And here, now we are getting into high-end research, and that's what is calling for better office spaces, larger office spaces, because retention of that human resources is also a big question. So that's where going forward we do see a big growth in commercial real estate as well. As I said, 59 million square feet of area absorbed in 23, which is just a tad lower than what it was pre-COVID, which is about 60 million. So we are looking at least 7-8% of growth in 24 as well, which will be historic best for India as far as commercial real estate is concerned.
All right, sir. Appreciate your time. So glad you could join us with your thoughts here.